And three work together, accounting for cash and credit card sales. We have two learning objectives. You need to be able to record cash and credit card sales using a cash receipts journal, and then you need to be able to journalize cash receipts on account using a cash receipts journal. So a cash sale is just a sale in which a customer is going to pay for the total amount of the sale at the time of the transaction. So they are straight up paying for the full amount in cash. Credit card and debit card sales are going to be treated as cash sales because the business is going to receive those cash or receive its cash in a very short period of time. Now, when we talk about buying on account, usually the terms are going to be maybe 30 days. So that's why we do that separately than what we would do for credit card and debit card sales. A POS terminal, a point of sale terminal, is a specialized computer that is used to collect, store, and report all the information about a sales transaction. And then a terminal summary is going to be the report that summarizes the cash and credit card sales of a point of sale terminal. So here they're showing us an example of a terminal summary, and we can see that we have different types of credit cards here. We have debit card sales, we have cash sales, and then we have our total sales. So they're showing us Visa. We had 33 sales that were on a Visa credit card, and then we have that's broken it down into how much of our merchandise was sold, how much sales tax it was for that, and then the total amount. Okay, and we see that for each section. Sales information for credit card sales is going to be stored on POS terminals. A batch report is a report of credit card sales that are produced by a point of sale terminal. So a lot of times when they do that report, they'll do that batch report, which is called batching out. The process of preparing that batch report is called batching out. Batch reports can be pretty detailed. They can show every credit card sale, or the batch report can just be a summary showing only the number and the total sales by every credit card type. So that's kind of what we are looking at here, is the different credit card types and then the totals. So here is the example of the actual batch report. Like it says, just like on that terminal summary, we see the Visa count, we see the sales, and here they actually show us the returns too from Visa cards. Okay. A cash receipts journal is a special journal that's used only to record cash receipts, cash receipt transactions. And then a sales discount is going to be a cash discount on a sale taken by the customer. So we've looked at our cash payments journal. Now we're looking at our cash receipts journal, another special journal that we have. Again, we're going to have a date column. We have our account title column, document number and post reference. We have our general debit and credit. And then these are special amount columns. Notice we have 5 special amount columns. So one for accounts receivable credit, one for sales credit, sales tax payable credit, sales discount debit, and then cash debit. Now this one, we should have a cash debit for every transaction that goes into our cash receipts journal. Because anytime we receive cash, we're debiting cash. If we do not have a cash debit, that tells us that we are in the wrong journal. First transaction, November 4th, we recorded cash and credit card sales, $6,280 plus sales tax of $376.80 for a total of $6,656.80. Terminal summary 35. So what we're going to do is we're going to debit cash for the total amount. So this was the total amount that we received. That is what we debit cash for. Then we're going to credit cash for the amount of merchandise that we sold. So this is the amount of sales that we had. So that's what we credit sales for. Next, we're also going to credit sales tax payable for the amount of sales tax that we have for those sales. Remember, sales tax is a liability. We do not get to keep that money. We hold on to that money until we pay the government. So here's what it looks like in our cash receipts journal. We're going to start with our date, and then we're going to have a check mark here because we don't have an account title to put in here. And we're also going to put a check mark on our post reference column too, because there won't be anything to post individually. They do show our document number is TS35 for Terminal Summary 35. And then what we see here is we have our debit to cash, and then we have our credit to sales and our credit to sales tax payable. So all three of those go into special amount columns. That's why we don't have an account title to write in here, because all of our accounts are already in special amount columns. The reason that we're going to put that check mark in there is because we don't want it to look like we forgot to write something in this. Okay? So we never leave that blank. Next transaction on November 4th, we received cash on account from Edmonds Hospital, $2,516.80, covering sales invoice 448, receipt number 610. So notice they give us two document numbers, but this first one is just saying that this was the initial purchase. And what's happening is Edmonds Hospital bought merchandise on account from us, or bought services on account from us, and now they're paying us for that. So we're going to debit cash for the amount of cash that we received, and we're going to credit the accounts payable Edmonds Hospital for the amount of cash, or for the amount that they paid us. So we start with our date. We're going to put in the customer's name that paid us. We're going to put in our receipt number of R610. We are crediting accounts receivable, and we are debiting cash. Okay, now we're looking at calculating cash receipts on account that has a sales discount. So here we would be giving a customer a discount. So what we would do is we would take our sales invoice amount times the sales discount that we are offering to figure out what that discount is. So in this case, our sales invoice is $1,450. We're offering a 2% discount. So multiplying those together would be a $29 discount that we would be giving to our customer. So in this transaction, November 5th, we received cash on account from Palmer Dentistry, $1,421, covering sales invoice 462 for $1,450, less a 2% discount of $29, receipt number 611. Now, there's a lot of numbers in this one. There's two source documents, so it might be kind of confusing. Here we need to look at this part here, covering the sales invoice. So they're saying that they're paying us for that sales invoice, the total amount. Okay. However, they're not paying us the total amount that they owed us of $1,450 because we're offering them this 2% discount, that $29 discount. So what I do is I look at first, how much cash are we receiving? We're receiving this in cash, $1,421. This, they put 80 cents, but this is just $1,421, I believe. So then we're going to put in a credit to accounts receivable for the full amount that they actually owed us. Because even though they're not paying us that full amount, we offered them a discount to cover that full amount. So we're going to credit for the full amount. Now, our debits and credits do not equal here, so we also need to debit our sales discount for $29. We're going to go ahead and put that into our cash receipts journal. Start with our date. Here's our customer's name, Palmer Dentistry. Our receipt, R611. We're crediting our accounts receivable for the original sales amount, for what they originally owed us. Then we're going to debit our sales discount for the discount that we gave them, and we'll also debit cash for then the total amount of cash that they gave us. Now, make sure that you add up your two debits and they equal your one credit. Number 1, how does a POS terminal determine the price of an item? Before any sale is going to be entered, the number, description, price, and quantity on hand of each item of merchandise are going to be stored in the POS terminal. Number 2, what are the two types of batch reports? A batch report can be very detailed and it shows every single credit card sale, or we could have a summary of the number and the total of sales by each credit card type, like all of the Visa credit cards, all of the MasterCard credit cards. Number 3, what is meant by 210 and 30 credit terms? So 210 means if a customer pays the amount that's owed within 10 days, we would give a 2% discount on that sales invoice. The N30 then means that the net amount, the full amount, is due within 30 days. Okay, so we're just giving the customers an incentive to pay us. We want our cash earlier. So we're saying, okay, we'll give you a 2% discount if you pay us in those 10 days. But if you don't, the full amount is due within 30 days. And that was the end of lecture. You can now move on to the work together.